We continue to see an increase in the amount invested in passive strategies, and we've spoken previously about the adoption of these strategies globally. Indices can also be used to complement other investment strategies to great effect, whilst providing broad exposure to a range of different asset classes. Hello, I'm Sanjeev Meni, and I'm delighted to be joined today by Bernard Caralp, Chief Investment Officer and Head of Asset Management at SedcoCapital. We're going to discuss how they are implementing passive into their overall investment strategy. Thanks for joining us today.
Thank you for inviting me.
On our previous video, we talked about how you're using passive strategies, but you give us more detail. What exposure are you seeking in terms of asset classes and actual factor strategies?
Mainly for us, regarding our investment universe and the use of passive strategies, mainly public equity and many regional public equity. For regional public equity exposure, we are using pure passive strategy. We are using as well factor investing strategy. Depends if you want to look at it as passive or indexing strategy, or as not purely active, but between passive and active. And we are this part of the strategy are not part of the core pocket of our approach, but on the satellite pocket of our approach, meaning that we try to create alpha through an equity portfolio from two angles. One, the regional asset allocation based on the core pocket, when we have only exposed fund exposed to specific regions. And from the other angle is from active management or less passive management, what we call factor investing from our satellite pocket, where we try to have the right strategy to overperform the market according to our view and according to the business cycle. We have already, and we are looking at maybe doing more about that. We are already two factor investing strategy, one based on high dividend yield strategy, screening, and another one based on durable demand, which is a more defensive strategy. The main reason of that being that the fact that, as you know, we are following a prudent and ethical investment approach. The prudent part being the Sharia compliant aspect of our philosophy, and for this reason we cannot short the market. So we wanted to have this kind of granularity to allow to protect the downside of our client portfolio.
Okay, so clearly investment universe is important here. How has performance been if you're using passive strategies in this way?
I will reply on a year-to-date basis, according to the risk profile of our clients and according as well to the regional allocations they want to be exposed to. I will say on a year-to-date basis as of October of this year, because November is a little bit too early for me to provide you some data, the performance is between 3.8% up to 5.5%. On the midterm, and I think it's very important to keep that in mind, this kind of strategy was able to return to our clients between 4.8 and 6.8% absolute performance. And so it's a very important point, maybe besides the performance strictly speaking. I think that and I would like to refer to a research working document written by SedcoCapital Chief Risk Officer, which demonstrates clearly, based on data provided by S&P, and thank you for that, which demonstrate clearly for at least the three main regions, Europe, US, and Asia-Pac developed, that the portfolio having a Sharia compliant strategy are overperforming portfolio which are unconstrained or conventional portfolio, but as well some portfolio linked to the ESG approach or in ethical approach. I think it's a very important result that, and this document will be soon published by this person.
Okay. And you've mentioned ESG, so you have. How is ESG developing within your region, and what various ways are you implementing ESG?
ESG is developing locally and regionally and is following the same trend as we see globally. I think that what is important is that SedcoCapital has been a pioneer in supporting this kind of development, because we were the first asset management entirely Sharia compliant to sign the UNPRI. So it was 2 years ago in June 2014. So I would say the combination of Sharia filtering and ESG criteria is really part of our DNA, and it's really the grounding principle of our investment approach. We like to call prudent and ethical investment philosophy. So it's very important for us, and we are very happy because this trend is global, and you see more and more asset managers, but as well more and more institutions which are implementing this kind of criteria in the investment process or in the decision process when you are selection process when you are an institution. And we are very happy with this development. And it's not at the expense of the performance, as I told you just before.
That's very interesting. Thanks very much.
Thank you.
For more information, please visit www.spdji.com.